I'm saying if we continue business as usual, in 20, 25 years, 30 years' time, there's going to be a major disaster.
If we were to look at it optimistically, we'd see that nothing has changed much other than a few numbers in the computer. Now we know that this video is not supposed to be a piece of moral advice for you to work in a specific manner, but what we are trying to tell you is that all of the things you own, the most essential asset you need to take good care of and must preserve without any losses is yourself and your mind. These two assets are the ones that will help you get over and protect everything that has ever mattered to you. Welcome back to this video where we'll be telling you a few tips and tricks that have come straight from the hands of the experts that may help you make yourself ready for all adversaries that may come in your way to being a very successful stock market investor. Hit the like button and subscribe to this channel for more similar videos. Leave a comment on your views and thoughts. We would love to hear you speaking and take this conversation ahead. To a great extent, the stock market has been indicating the kind of wealth this world has. There are greater indications to make more precise comments about this. However, generally speaking, the stock market does indicate the manner in which we have been handling money in this world. Before we get started with the tips you're looking for, always keep in mind that the kind of investment you've chosen has an inherent character within it to cause a few losses in the way, and these must not be taken to your heart. Always keep in mind that Peter Lynch has been telling all investors since day one, invest only what you can afford to lose. This will help you get through your pain of making a loss much better, as you will know that the money you lost will not affect your standard of living in any manner. The only thing it may affect is the prosperity you build through the market. And the best part about it is that as long as you're fit and healthy, able to focus, and have the time to learn, you can always make it back up. So, the first rule that every investor will tell you to follow is to ensure that you invest only what you can afford to lose, mentally and financially. Always remember that everything you have made in your life, including the business, personal affairs, and other factors, is all a part of your mind. What we mean here is that as long as you keep your mind healthy and your body functioning, your chances of remapping all you lost are always high, and no one in that case will be able to stop or pull you down. So, never let your mind lose about the losses in the market. Look back around 10 years ago and have a look at what your life was. Learn from your mistakes then and build your empire again, but faster this time, now that you know how to. The economy will always go backwards. All you need to do is to adjust and figure out a way out of it. The financial crisis of 2008, for example, was the result of a bubble. Of the 75 million people back then who owned houses, 50 million had mortgages to deal with. And to find out the real culprit of this bubble, information was a very impractical way of getting to the real issue. So, Warren Buffett in his interviews mentioned the need to form a distinction between the fog of war and the fog of panic. He referred to the 2008 crash and stated that the people need to talk about the latter and not only the war per se. So during this panic, one tends to gain a lot of inaccurate information and rumors, and waiting till you find everything out may turn too late. This is exactly what happens before a crash as well. There is a mixed opinion among people about the kind of status the market will be in as time passes, and you may be on one side or the other by the time the market shows its true colors. So one thing that he mentioned was to never try and predict the market, as it's undoubtedly an unpredictable affair. In case you're certain of a market crash coming your way and would like to save your investments before it hits you, one thing that you must always make sure is to sell all of your short-term investments and portfolio diversification. It may be a better option for you to keep your long-term investments alive, as these are the ones that generally are supposed to yield you profits after a couple of years, say in the following 10 to 20 years down the line. A step in this direction could help you make massive savings during the crash and be better off without having to worry a lot about the money you lose. This was something that you need to quickly do as you notice the market falling down. Now, in case you have a fear of the market prices falling rapidly, one of the best ways to protect your money is to have the stop loss set for your investment. This is a tool that is extensively being used by younger investors. This is a very good tool that allows you to set certain limits that will automatically stop your trade if the prices of your stock fall to the level being set by you. This helps you to mitigate the risk and will help you live with lesser stress, as you will make some more profits even if the market prices fall down below your liking. The volatility in the stock market has had multiple praise in the past. The investor therefore needs to ensure they trade very carefully as they invest their hard-earned money. One of the key reasons for their losses is lack of knowledge, and with this video, they can certainly be wiped out, so you make sure you share it among your friends, relatives, and other investors. You need to know what you own. What an investor makes an investment. he must look into a lot of other factors apart from just the prices of the stock, its charts, and other fundamentals. An investor must also have a good look at the nature of these companies and the manner in which they work and they have been working historically. For example, investing in a cyclical stocks may cause for falls from time to time. So to remain safe, always invest in a few non-cyclical stocks as well, as that may help you reduce the losses you may make from other stocks in case of a crash. These are otherwise called defensive stocks, and these do come in handy if used in the right manner. This advice also takes us to another tip, which was also mentioned by Warren Buffett, to never invest in all your eggs into the same basket. In other words, make sure your portfolio is diverse enough to sustain the losses of one company over the other. This also applies to other forms of investments, as in, make sure that the investments you make are spread out to areas such as stocks, properties, and others to make sure that you have multiple sources of income. So these were a few of the ways that could help you get through the need to manage risks in case of stock market crashes. Keep in mind that while all of that happens, there needs to be one strong way for you to ensure that you give your mind enough time to think about all that has happened and make a decision. It is very important for you to ensure that the decisions are well thought and not hurried up. In the case they are, you may involuntarily end up making the losses that you would not have made had you invested a good amount of time and research along with your money in it. One may not be able to predict the fall of the market, however, what one can do is have a look at a few of the essentials and try to figure out the general direction in which the market is going in the recent days. What this does is that it helps you to learn about the market and will help you to take a decision even before the occurrence of an adverse event. Learning your investments and knowing where your money goes is one of the primary requirements to remain safe during a fall in prices in the market. So that is all for today. We'll meet you with another one in the videos coming ahead. Make sure that you wait for us and use the time to keep learning and making the right decisions. Always remember that the market waits for no one, and your decision is to be made yourself. Make sure you do have good research upfront and always cherish the opportunities you receive. We will meet you again until next time.